What's up, people? Welcome back to Invest with T-Claus. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, Neo, Virgin Galactic, and ChargePoint. Come for the information and stay for the perspective. So the broader stock market found yet another reason to rejoice this week and push higher to a brand new all-time high. The Fed funds rate was held steady. However, Fed Chair Jay Powell reiterated the guidance for 3 rate cuts this year, which was widely expected, and I know for a fact I've definitely told you before that I personally did not expect the first cut to go into effect until at least June of this year. And so far, that is what has been playing out. Now, while everything stock market related seemed to be rallying up, the Riot Platform stock fell as low as $10.52 before recovering to $11.40, where it closed the week for a 1.72% decline. So why am I able to keep a smile on my face? Well, that's because the risk-reward profile on this stock just got significantly better, right? And so in today's video, I'll go over the latest news on Riot and how they're positioned to win. We'll then take a look at the current analyst consensus. Worth noting here that the stock was just upgraded. Stick around if you want to hear why. And I'll close with what I've been personally doing as far as buying, holding, or selling. As always, this is not to be taken as financial advice. I'm not a financial advisor. This is my personal approach to investing and the thought process behind it. I'd recommend watching all the way through so that you don't miss out on anything pertinent I'll be sharing. Drop the video an early like if you haven't already, and smash that subscribe button. Those are 2 easy ways to show your support to the channel and help it grow if you appreciate the content. All right, let's get into it. So let's start with a fun fact for you. About 2 weeks ago, the price of Bitcoin pushed to an all-time high right around 73K before selling off and dropping back down to the 61K range. Since then, the price has been gradually recovering. Now, when you look at the inflows into the spot Bitcoin ETFs, the blue bar that you can see on the screen here represents BlackRock, and the neon green bar is Grayscale. Now, to make a long story short, during the week of March 11th, when Bitcoin was at an all-time high, inflows into the BlackRock ETF was also at an all-time high, and outflows out of Grayscale was decreasing. The following week, when the price of Bitcoin fell, the inflow and outflow ratio out of BlackRock and Grayscale was reversed, right? But as the ratio improved throughout the week, so did the price of Bitcoin. This is an oversimplification, obviously, but the point is, we're seeing in real time how the supply-demand dynamic around these ETFs plays directly into the price of Bitcoin. This now brings me to Riot and how they play into the supply side of this equation. During the month of February, Riot mined a total of 418 Bitcoin, which is down 20% from their January production of 520. But you'll also notice that they did not sell any of their Bitcoin during the month, right? This therefore increased their total Bitcoin held by 5% to 8,067 from 7,648 the month prior. We'll have to wait and see how the month of March numbers come in, but the overall increase in Bitcoin held is a net positive for the top line revenue. With the halving next month and the block reward being cut from 6.25 Bitcoin down to 3.125 Bitcoin, every mining company has been in a race to try to acquire more mining equipment and increase their hash rate, right? So this, of course, is in order to try and offset the block reward reduction. Riot kicked off 2024 with a hash rate of 12.4 exahash per second. They have since then announced a purchase of 31,500 new MicroBT mining rigs to be installed at their Rockdale facility. Now, those rigs are more energy efficient, which should go towards keeping the cost of mining Bitcoin reasonable, despite the additional equipment coming online. Roughly half of the new rigs will replace equipment that is currently underperforming, while the rest will go towards increasing that facility hash rate to 15.1 exahash per second by July 2024. But more importantly, with the new facility Riot is building and bringing online, their hash rate by the end of Q2 this year will be 21.4 exahash per second, so nearly double shortly post-halving. That's huge, and that's important. This essentially means that their revenue from Bitcoin mining should only barely be affected near term, given the ability to maintain production level, and is likely to continue to rise as the price of Bitcoin itself gets boosted by institutional demand. Again, Riot has no debt, and this is important, and all of the equipment needed to execute on this plan is already purchased. The timing of their expansion lines up extremely well, and the reason being that available supply of produced Bitcoin is reduced drastically while the demand is on the rise. When you consider that many experts are currently projecting the price of Bitcoin to exceed 100K this cycle, Riot has done a great job, in my opinion, positioning itself to ride this wave all the way up. And if you remember, I've told you before that the price for Riot to mine Bitcoin is $7,539. Even if that cost was to double, with the price of Bitcoin over 100K, that would still represent a profit margin of over 80%, okay? This gives them massive earnings power. Investors and analysts alike love growth companies with massive earning power potential and a clean balance sheet. This is what Riot currently represents. To further illustrate this point, just this week, JP Morgan analyst Reginald Smith upgraded Riot from a hold rating to a buy rating with a $15 price target. The rationale was simple, and I quote, "The adjustment comes as Riot Platform is expected to significantly increase its hash rate, a key performance metric in the cryptocurrency mining industry. The company is on track to boost its hash rate by 9 exahash per second in the coming months, with an additional 10 exahash expected in the second half of 2024. This expansion could elevate the firm's total hash rate to an impressive 31.5 exahash per second by the end of the year," end of quote. This, by the way, wasn't the only upgrade. The overall consensus rating is still a strong buy, but now it is made up of 8 total ratings versus 5 prior. We have 8 buy ratings versus the 4 I reported the last time we spoke. The 1 hold rating has now dropped to 0, which is good, and there is absolutely 0 sell ratings in sight. Take a moment and let that sink in, okay? Sentiment is turning here, even if the price has yet to reflect it. And there lies the opportunity, okay? The high end of the range increased to $25.50 versus the $22.50 prior. The low end of the range has also increased to $17 from $12 prior. And the average consensus price target, yep, you guessed it, it too has increased from $17.90 to now $20.25. This implies a 77.63% increase from the current level and a cool double once we hit the top end of the range. As I said at the start of this video, the risk reward on this stock has significantly improved with this correction, right? It's an appealing valuation, and the underlying business fundamentals as the year progresses could support bigger allocation in many investors' portfolio, hence the unanimous recommendation to buy. And let's not forget that they delivered a pretty significant beat on expectations during the Q4 of 2023 earning call. The price of Bitcoin has risen over 30% since the year has started, and I'd say that another profitable quarter is in the making with a likely beat on expectations, especially if you look at the current projections that currently show a negative quarter. So I think we're in for an upside surprise here. So given everything that has been covered, what does this mean for me personally? The last time we spoke, the stock had pulled back and was trading near $14, and I told you then that that pullback was an opportunity to add. From there, we shot up to a year-to-date high of $17.62. Anyone we would have swing traded that made some money, but then Bitcoin corrected and Riot corrected even harder. But here's the beauty in all this, right? We're essentially back where we were at the start of this year, meaning that everyone who felt they may have missed out on the last run up now have the opportunity to jump back in. And I've told you before that the halving is very likely to serve as a catalyst for Riot and will be what propels it higher as the demand for Bitcoin increases. Because I do believe Riot to be one of the few mining stocks that will be able to respond to the increased demand from buyers, in addition to having the ability to increase its own Bitcoin holdings. And so with that in mind, during the most recent drawdown in price, I added even more to my position with buy points at $12.90 for 300 shares, $11.88 for 100 shares, $10.60 for 100 shares. That was near bottom and really liked that buy point personally. And $10.98 for another 100 shares. Assuming we can stagnate here for a bit longer or even possibly drop a bit lower, I am 100% a buyer. Okay. The reason being that even in the event that we are only able to achieve the lowest price target of $17, That's roughly a 50% upside potential from this level. But the reality is, and this is why the rate cut discussion matters, we will soon be entering a full-blown risk-on market, meaning that crypto and stocks like Riot and Mara and CleanSpark are going to benefit heavily from the extra liquidity that will be funneling back into the stock market. And so in my opinion, and it is just that, my opinion, there is an easy 100% built into the stock right now as a factor of the pullback that we just experienced. And this is without its valuation being stretched based on the projected revenue. The bottom line for me, and also the last thing that I will say, is this. It is not when the stock is pulling daily gains of 15 to 20% that I want to be trying to chase it up, right? That's definitely not the play. And so it makes perfect sense to me to build a strong position right now while the price is much lower, and that's exactly what I'm doing. The only question I ask myself at this point is, how many dollars do I want to make for each single dollar increase in the Riot stock price? For me, the answer is at least $1,000, but best believe that I will try and exceed that if we can stay at this level up until the halving next month. But on that note, that is it for me today. If you found value in my content, click the like button and share with others who you think could also benefit from it. For my newcomers, subscribe. It's free. And don't forget to ring the notification bell so that you too can stay in the know. I'll be back on Sunday and possibly during the week for an extra video. Till then, you can keep up with me here on Twitter for crypto and NFT related news. Thank you for watching. Stay humble, hustle hard, and I'll see you in the next one.